How's it going, fellow traders? It's Magic Trader here, and today is March 1st, 2018, and I'm going to do a market outlook video because we've been getting a lot of volatility in the markets now. So it's time to run through all the markets that I trade and take a look at what has been happening with price and see if there's any possible institutional trade signals that are going to present themselves. I've already spotted a couple, and I'd like to discuss those in this video. So, excuse me. We're at a new month. We just finished February. Got some nice returns in my personal account and the managed accounts as well. So things are looking pretty good. And as we've known, the last few weeks we've had profit taking from the institutions. The institutions were holding long positions on the euro, pounds, a bunch of other pairs, and some shorts as well. And it got to the point where they wanted to take some profits on those positions. So we were able to spot those exact spots where the institutions were going to start taking profits. The COP report was very instrumental in pinpointing exactly where they were going to start offloading their positions. That's exactly what happened. We can see now that price is retracing on all on the majors, including gold and oil. And so with all this volatility in the markets, new trade signals are presenting themselves. New institutional trade signals are presenting themselves. All right. So on this video, I also want to explain institutional trade signals and what they are, because a lot of people in the Forex industry and in the trading industry, they always tout trading signals. A trading signal is different for everybody because it all depends on your strategy for trading. What's a trading signal for one guy is not a trading signal for somebody else. And many times with retail traders, what's a buy signal for them is a sell signal for the institutions. Now, what I do when I trade is I'm following what the institutions are doing, because what I've come to learn is that the institutions are the ones that are moving the markets. Nothing else is moving the markets, just the institutions. Where they are buying and where they're selling is what moves the markets. And so when they buy, after they fill in their orders, they need retail traders to buy after them so that they could push the markets a little bit higher. So they use the news and economic data to influence retail traders to make them make emotional trading decisions that will push price in the direction that the institutions need it to go to. So I've come to realize this years ago, and that's why my focus has always been on learning to spot where the institutions are getting in the markets and where they're getting out. So there's a common theme that plays out when the institutions are getting into positions. The institutions, because the size of their orders are so massive, they can't always fill in their orders with one place of an order. It gets triggered, and that's all that they want to get filled. So to make myself a little bit more clear, if we want to get into a position, we just place an order or a market order and we get into our position. Why? Because our positions are not that big, right? We're not billionaires. Or maybe some of you are, I don't know. I'm not a billionaire. So I fill in my positions, and I can fill them in with one order if I want to. The largest institutions in the world, they can't do that, because if they were to do that, price would just go out of whack and skyrocket, and then it would become too expensive for them to fill in their orders, because price would just move away from the area that they're trying to purchase it at. So what they have to do is they have to take their time accumulating a position. So when they accumulate a position, what they do is they fill in some of their positions, which causes price to react and move. And then they allow price to exhaust and allow price to retrace back to where they originally filled in their orders. And then they fill in some more. And then price moves away from that zone where they are filling in their orders, and then will slowly run out of speed or steam and start to reverse right back to that same area. Now this will happen over and over again until they accumulate the position that they want. So what I look for is those areas where the institutions are filling in their orders. And it's not easy to spot because, you know, price will jump from a zone or shoot away from a zone because of many different things. Depends on where price is it located somewhere particularly, or is it just responding to a trend line or responding to a moving average? There's so many reasons that price makes explosive moves from an area. So, you know, over the years, my focus and concentration has always been on to figure out how to determine what exactly the institutions are doing. And studying the CFTC COT reports has been instrumental in giving me the knowledge required to determine where the institutions are filling in orders because they are accumulating a position to eventually shoot price up towards their targets. So when I talk about an institutional trade signal, I'm talking about those exact zones where the institutions were accumulating a position because they have inclination where price is going to go to, or they have targets on where they want price to be moved towards, or they have some knowledge of why price is going to move to a certain target. Because remember, the institutions are what moves price. When they buy, price goes up. When they sell, price goes down. And as we know by looking at the news, you know, it has recently come out the last couple years how the banks were working together to move the markets. And I hope this wasn't a big shock to anybody, because this is what they've been doing for years, and they still do it to this day. So when it comes out, oh, you know, they're manipulating the rates to get price to move, you know what? It's not just that they're doing, all right? They're working together to move the markets. Why? Well, it's very smart when you think about it. You know, if you were working for the largest institution or one of the largest institutions in the world, and your job was to make money for the world's billionaires, that's it. That's your job, is to make money for the world's billionaires. Period. That's your job. What you have to do is you have to buy something and you have to hope that it goes up, right? Well, the world's billionaires are not placing their money with somebody who hopes and dreams that price is going to move somewhere. The world's billionaires are placing their money with people who can guarantee a result. All right? So the world's biggest institutions and banks, of course they're working together. You know, they give the illusion that, you know, they're competition. You know, it's like a wrestling match. You watch wrestling, right? You see everybody in the audience, you know, they've got the mindset of a 5-year-old watching, cheering for the good guy, cheering for the bad guy. And in reality, retail traders are the exact same way. Retail traders are those 5-year-olds in the audience cheering for the good guy and cheering for the bad guy. You know, falling for the illusion that there's this competition amongst all the world banks and all the big institutions and stuff. No, they're working together because they all get the game. At least the higher ups do. They all get the game. They all know what they have to do. That's why when you go to the bookstore and you look at a book on how to trade, almost every single book is telling you to trade the exact same way. Why do you think that is? Why do you think there hasn't been a book by an institutional trader that has said, hey guys, guess what? I'm gonna let you in on a little secret. First of all, because that guy wouldn't live another day if he did that. All right? Because, you know, they don't want the gig to be up. So I'm not going to go too much more into it, but I just wanted to give you some history and some background as to what an institutional trade signal is. Again, it's an area where I've determined that the institutions are going to accumulate a position. Actually, I haven't determined that. My analysis has determined that. They are telling me that. By studying the charts, I look for those areas. By studying the cut reports, I look for those areas where they're buying and selling either gold, oil, or any currency pair. So over the years, I've been able to get very accurate with understanding what it is that they're doing, getting into the mindset of the institutions, figuring out what it is they're up to, and trying to figure out where exactly they're going to be accumulating a position. So I've been doing quite well with that, and I've been successful with that. So when you see me point out an institutional trade signal, that's just what it is. It's an area where the institutions are looking to accumulate a position. So with that being said, let's take a look at gold, and let's take a look at what has been happening with gold. All right, so we said that we were expecting price to drop, right, because of some profit taking. So we saw in the COT reports that the institutions were very aggressive. Let's go here. They were aggressive here back in November, then they became less aggressive, and they were sitting at 77% exposure for quite some time. Then we got this one last push up on the weekly chart, and they added 6,000 longs positions to get price up. So that's what happened here. Let me get my little drawing tool. Hope you guys had a good trading week this week. It's been a great one for me, and I hope you guys use the analysis to make you some money too. I'm going to Florida next week, and it's nice to have these gains in the account before I take off. So that last push up here was this candle here, back at these highs, and now we see the drop is happening, right? I've had these arrows on this chart for quite some time. Why? Because I'm expecting a drop down here and confluence with this area, and here is my institutional trade signal. Okay, right there, that's my institutional trade signal. So what's going to happen is if and when I'm expecting price to drop as per these arrows, when price gets down here, I'm looking to start buying gold like that. Okay, because what I think is happening here is the institutions are accumulating a position. They're accumulating a position, and they want to accumulate it here at this price range right here. They want to accumulate a position here to ride and take profits here, here, and eventually here. That's what I see happening. All right. So, and I'm pretty solid on this thought. So that's what I want to do. I've seen it all being played out over the last few months, and the COT report suggests it, the technicals suggest it, and a lot of background research that I've been doing, which I'll be sharing with you guys very soon. Yeah, so just a heads up, I'm going to be coming out with a website, and because I've been getting a lot of requests from a lot of people to amalgamate and put all my data together in one format so that it's easily accessible to everybody. So that's what I'm going to be doing. I'm going to be putting together, actually I'm working on it now behind the scenes, going to be working on a website so I can put all this data together, information about the managed accounts that I'm going to be opening up to the public very soon, and access to my CFTC COT reports and the analysis and all that stuff that I provide to you guys. So, excuse me, stay tuned and look forward to that, because that's going to be coming soon. And I'm going to be sharing some really, really amazing knowledge that I know is going to change the way you look at charts, if I haven't done so for you guys already. But this is what I believe is going to happen, is a move up here, up to the 15 and 16s. So since I believe that, and since I've seen the evidence to suggest that, that's what I'm going to be doing. I'm going to be doing exactly what they're doing. I'm going to be thinking long term like this. I'm going to be getting in positions here and all the way up, and then when it reacts to supply and drops, I'll be taking profits with them. And then when they start to reaccumulate again, I'm going to reaccumulate with them. So that's what I see happening here. I see this drop down like this. So so that's what I see. That's what I'm waiting for. Let's go on to oil. So oil is dropping, as I had suggested. I said that I wrote in my journal yesterday, posted it on Twitter, that excuse me, 1 second. I said that with the US CAD showing a lot of support and moving upwards, that the Canadian dollar has been weak, and when the Canadian dollar gets weak, oil gets weak, and we've been seeing profit taking, right? You know, if you take a look at the COT report, you know, this is just nuts. Take a look at these numbers. 88% overall exposure to the long side. Okay, yeah, so we start seeing some profit taking here, right? From 866, 862, 837, and 804. So finally taking some profits. But these numbers are still high. 88% overall exposure. So, you know, all this is an indication that we're going to see this move downwards. I'd like to see a move down to here, and I think this would be a good area to start accumulating again, but I'm not going to assume that it's a good area to see accumulation. I'm going to wait for proof. I'm going to wait for proof on the charts, and I'm going to wait for proof on the CFTC reports. Because the one thing that the institutions cannot hide is what they're up to. Because when they actually do what they're doing, we can actually see what they're doing on the charts. And not just that, but the COT reports tell you exactly what they're doing. So I mean, when you can grab that information and put it together with supply and demand, and understanding how the markets truly work, and understanding how to read the markets properly, the information is just laid out to you. You know, your job just becomes being objective and not being emotional. And the way you become unemotional in trading, here's the secret. Okay? Here's the secret to not being emotional when you're trading. It's to trade well. Okay? Because when you open up positions and the drawdown on your account is so little and the upside is so great, and you're holding positions that are, you know, more likely than not always in the green, your emotions are not going all over the place. The only emotion you're really feeling is one of satisfaction, because your analysis was dead on. Period. And let me tell you something. If your analysis is dead on, you're going to be right a heck of a lot more times than you're going to be wrong. I find myself being a lot less wrong these days when I'm trading than ever before. And it's because my analysis is getting better and better. You know, every week, every day, every month, my analysis just keeps on getting better and better. And it's not just because of, you know, regular trading. It's because of the work that I do behind the scenes. It's the journaling. It's the reading into price. I journal every single day. I look at the charts every single day, and I break apart exactly what each of the pairs are doing. Why is it doing that? Why did it do that? Why is that zone broken? Why are they selling right now? Why is it reacting like that? Why hasn't that trend line broken? To understand exactly what they're doing, I have to follow along the story. I got to follow the story. constantly trying to follow the story. What are they thinking now? What are they doing now? Why is that happening now? And that's how I've learned. Okay, that is how I've learned the dynamics of the market. So, so getting back on point here, a move down. Once price gets down here, I'll be looking for those signs. As I'm journaling, I'm going to be saying, okay, so this happened. Now I'm expecting this. Okay, now it's hitting that area that I thought I'd start to see some accumulation. So what is that going to look like? What kind of proof do I need? What will be proof on the charts and on the COT reports that that accumulation is starting to happen? And then as long as I stay objective and I stay aligned with what I need to see, I just wait to see those signs. And when the signs appear, boom, done. Now I know what they're doing. So now I'm going to be looking for those institutional trade signals. Boom, there's an institutional trade signal. Set up my orders. Boom, I got triggered. Oh, look at that. Look at that. Price is moving in my favor. Wow, what a surprise. No, it's not a surprise. It's day after day after day after day of work. I mean, the amount of work that I do personally on my trading every day is ridiculous. And so, but it only takes 1 second to place an order, right? It takes 1 second to place an order, but it's not that 1 second order being placed. It's the amount of work done every single day. And you know what really drives me nuts is when you hear these trading mentors out there saying, hey, all you have to do is put in an hour every morning and you can become profitable in the markets. Let me tell you something. If you think all you have to do is put an hour in the morning to become a profitable trader, you're delusional. Okay? You're delusional. The only reason somebody would tell you that that's all that's required from you is to put like an hour in the morning of work and then you're going to be successful is because they want to sell you something. They want to sell you this dream that if you take their magical course, you're just going to read through the course, spend an hour every morning, and you're going to be profiting. It's not going to happen. I'll tell you that right now. Period. It's just not going to happen. It's impossible. Impossible. All right? So, so don't believe that garbage. Every time I see that, it just makes my blood boil, because I know what's required to become successful in this business, and it's not an hour a day. If I spent an hour a day, you know, studying the markets, trust me, I wouldn't be close to where I am in my trading career right now. Not even close. No way, ands, ifs, or buts about it. It would take me 40 years to get to where I am today. You know, think about it. When you spend 12 to, you know, at the beginning when I first was getting into this, I was spending, I don't know, close to 15, 16 hours a day studying charts. Now it's a little bit less, you know, because I've been able to afford that extra time. But, you know, it's definitely more than 12 hours a day. Journaling, studying charts, working on my trade journal, doing testing, trade reviews. Yeah, for sure. So if you only put an hour a day, what do you think? You think your brain is going to magically look at charts and understand price action and be able to place trades with confidence and unemotionally when you only spend an hour a day? When it takes thousands of hours to understand the markets at a point where you can actually trade without being very emotional? No. So just think about it like that, okay, guys? Anybody tells you that, just think about why they're telling you that. Anyways, let's get back, getting into a little bit of a tangent here, but anyways. So yeah, so I'm looking for signs down here. When price gets down there, then I'll look for opportunities to get in. US dollar, this chart still hasn't updated. I tell you, I see markets, man, very disappointing with these guys. So, but weekly supply has been taken out, and I'm a little bit worried, not worried, but I'm a little bit concerned about this chart, because I take a look at trading view and I look at the US index on there, and that weekly area of supply hasn't been taken out, but on my charts it has. So really wondering what's going on here with price. They say that they're going to update this chart soon. We'll see when that happens. But on my charts, weekly supply has been taken out, and I wrote in my journal yesterday that gold is looking to drop further, but the only way that's going to happen is when the US dollar takes out that weekly area supply, which is what happened. So it got taken out. Gold is now dropping, as you can see, and so now we have an area of demand here. But this chart's a mess, so I really don't want to focus too much on what's going on here until my data is updated. But, you know, I'm expecting a move higher. We got weekly supply just above price right here, which I'm expecting to see some kind of a reaction from. But a push higher is what I'm definitely expecting here. And once this goes higher, gold will drop even lower. All right, so again, when this chart gets filled in with the proper data, I'll go into more detail with what I see. Okay, so what do we see? Aussie finally broke through this area, which is what was expected. I said there was high probability chance that was going to happen. I've got orders to go in long down here. Why? Because that's an institutional trade signal. Accumulating a position off of a monthly demand imbalance. Let me take a look at that. I like to have my zones color coded because each color tells me something different about the area that is important to know. There, that's better. So I've got orders to go long there, and then I'll be accumulating a position to the upside. Because again, once the US dollar momentum starts to shift to the downside, I believe, you know, this will be down here. Just like I believe euro will be lower, pound will be lower, Swiss franc will be higher, and so forth. So I'm expecting to see that move to the downside. There's a great area of demand here, and we could see price accumulate here in this area here. It's possible, considering price action here. This is possible to see that. So I'm also keeping my eyes open for that possibility. Okay, Aussie Cad, I'm in a long position here, as I gave the alert out weeks ago. It's a institutional trade signal for me here, so I bought it. And on my managed account, first bulletproof target has been hit, so it's a risk-free trade now. It's all upside right now. On my personal account, I moved my first target up here, and so I'm waiting for this breakout here, and then the move higher. That's why I'm waiting. So obviously, when the Aussie starts to gather strength, this is going to go up, right? And if you look at the US CAD, the chart wants to go up. So Aussie strength, CAD weakness equals Aussie CAD going higher. So that's why I moved my stop loss. I did have the stop loss here at bulletproof, or here, but I'm so convinced with this move to the upside, I thought I'd move that first target a little bit higher. Alright, Aussie yen, what do we see here? We see that price has dropped from this area of monthly supply, broke the trend line down. Now we're hitting these areas here and reacting. Could it go lower? Well, we're expecting Aussie strength to come in the markets, right? But the only thing is that the US dollar Japanese yen has been a lot weaker than the strength of the US dollar. So this one's a tricky one. I do believe US dollar Japanese yen is going to go higher, and I do believe Aussie's going to go higher. So I do believe this one has to go higher because of that. Force right now is downwards to the monthly demand zone, so I don't think it's going to hit this area here. Let's take a look here. I want to see something here. Yeah, nice monthly bearish engulf there, or 3-month bearish engulf I should say, down here. That would be a nice move, but I don't think it's going to get all the way down here. Eventually it's going to shift, and it could start shifting right here. Yeah, Aussie still has a little bit further to drop. So, if the Aussie has a little bit further to drop, yeah, but the US dollar Japanese yen, if that goes higher, yeah, it could just stall out here, and then we see a move to the upside. But nothing clear, 100% yet. No institutional trade signal, so I'm not trading this one. Aussie Kiwi. So what do we see here? Monthly is ranging. I think eventually we see price go up, and I think there's a good chance that we see it happening from down here, right down here. Let me see if the color coding is correct on this chart. Imbalance. Nope. That's how it should be. Beautiful, beautiful, and let me see. I think this is the wrong color. Yeah. Oops. So, all right. So I think we are going to see a move lower. So when that Aussie weakness comes in, I think we're going to see a push lower. And I'd be interested in accumulating a position here. But I'm not going to buy blindly here because it's not an institutional trade signal. I'll wait for the reaction from this area down here, and I'll wait to see the institutions accumulating a position. And once that trade signal has been presented, then I'll place my orders to get in. All right. CAD yen. So we were expecting this weakness and we got it. And now we're reacting to this area here. So let's think here. So what do we think is going to happen with the CAD over time? It's going to get weaker. That's what I think, right? It's going to get weaker, and the yen going to go up. US yen going to go up. So that's going to counteract this move. Canadian dollar will want to get weaker, but the US dollar Japanese yen will want to go up. So if we take a look at just this chart, what do we see here? We see that there's a good possibility that price comes down here and jumps up. Okay, but nothing clear, so I'm not going to trade it right now. Euro US dollar. So I mentioned on Twitter that there's been a institutional trade signal that's presented itself, but I was contemplating on whether or not I want to pull the trigger on this trade, and here's the reason why. So the institutional trade signal is here, shorting here at 122.91. But you take a look at where price is right now, and we're just sitting right above weekly demand. Right here, trend line here. So we could see a move up, trigger short, and then a move downwards. But the thing is, the profit margin is not big here. It's less than 3 to 1. And I don't like taking trades with a profit margin of less than 3 to 1. I like to aim for a profit margin of 3% return on my account to 5, 6, 7, 8% return on my account. If I'm going to put money in the market, I want to get a nice return for that. So, so this could work. This move up here could work to a move down, and we can definitely see a move up, down, move up like this, maybe retest this area and drop even lower, or move up, down, consolidate, and a move lower. That can definitely happen. It's tough. It's tough. And because I have to think about it so much, that tells me I should pass on it. Because now what's going to happen is my emotions are going to kick in. And my emotions are going to be like, well, geez, if you don't take this trade, then you miss out on the opportunity, because, you know, it is an institutional trade signal. You know, maybe you could just take 2.5 to 1 as opposed to 3, Because it would really suck a week from now. You look at the charts and you saw that price moved up, got triggered, and it went short, and you could have made a nice 2.5% on your account just with this one trade. See, my emotions are getting triggered. So now with my mind being emotionally involved in looking at this chart, now I can't think objectively. And if I just stop, calm my emotions down, and remove all of that emotional talk, what do I see? I see there's no profit margin here. And I don't like taking trades without a profit margin. And once price hits this weekly area of demand, there's no telling what's going to happen. There's a trend line here too. Weekly trend line, weekly demand, less than 3-to-1 move down. Anything can happen. So that's it. That's what my objective mind tells me. So I'm not taking this trade. And I would recommend nobody take this trade. And there might be some of you saying, oh, that's okay, I'll take a 1-to-1 trade. I'll take a 2-to-1 trade. Whatever, you could do that. I'm not recommending this trade. It might work, but it doesn't matter if it works. What matters is what the objective mind says, and you stick with that. So even though I expect price to eventually come lower on the charts, I'm not going to take any shorts right now. I'm just not loving the setup. So I move on. Euro Aussie. This was a trade signal that I'm testing. And as you can see, there was a nice result. A nice 3-to-1 at least. Move away. This would have made me over 3% return. Just this trade signal, but it's a trade signal that I'm doing some stats on. So I want to see hundreds of these setups, and I want to see what makes them work and what makes them not work. And then I'll find out through the statistics what makes them work, and in the future those will be institutional trade signals, because I'll know that the chances of those institutional trade signals working are very high. Or I think the better way to explain it is this: by doing testing, I'm able to determine why it works and why through other circumstances they're not working. And when I completely understand why it works, then I'll know exactly what the institutional trade signal is. So anyways, Euro Aussie had one, I think Pound Aussie had one. Yeah, here's another one right here. Look at that move up from it. Not bad. Another 3, 4, 5, 6% winner. But anyways, I'm still testing those scenarios. So Euro Aussie, I'd like to see a push lower here, but I don't think it's going to drop that low. Euro weakness should bring it somewhat a little bit further down, but Euro being weak and Aussie being weak, it could just hold this range and then maybe even break up through it. New area of demand, we could probably see a move like that, possibly, but lots of trading in this area, so it's difficult. When you're in a range, it's difficult to get into a trade, so I'd like to usually ignore zones like that for trading. It'll probably work, probably make a nice 2% or 3% winner, but not taking it for the reasons I laid out. So Euro Aussie, still watching it. No, nothing on the horizon as of yet. Euro Cad, same thing, not very pretty. We have monthly area of demand and control, but we've been seeing a lot of ups and downs. I think on the long term we're going to see a push higher, because eventually when Euro finds ground and starts to momentum shift to the upside, I think US CAD's going to continue to move up, and the CAD's going to continue to get weaker. So strong Euro, weak CAD means price is going up. But I'm going to wait for that to happen first before I make any moves. Euro Pound's been a mess, so haven't been taking any trades on it. I don't see any trade signals on it, so it's not even worth mentioning. Euro Yen. So we've had a weak Euro, as everybody knows. That's why this has been dropping. And the Yen has been fairly strong in comparison. So that's why we got this really nice drop here. It's possible that we see a further drop because let me just do the math here in my head. Yeah, because the euro is going to drop a little bit further, and the US dollar yen's been somewhat strong, so it's possible that we see a little bit of a drop, but I do believe that eventually we're going to see a push higher, because once that euro finds ground and it starts to build momentum, that's going to go up, and we're gonna see that the US yen is going to find ground and make a move up. So that just tells me that eventually this is going up. But I'm going to wait for those things to happen before I take any trade setups. Okay, Euro Kiwi. Let's take a look here. Okay, Euro Kiwi, a mess. Not taking any trades on it. A lot of sideways action. So there's nothing clear, so I'm passing on it. Pound US dollar, oh, look at that, beautiful. We're seeing the follow through on the drop. Nice, 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 nice. Love it. Targets are being hit right now as we speak. Great. So we hit that imbalance, profit taking here, weekly supply. Look how accurate that is. Boom. And drop. So taking profits on shorts, push price back up, take more profits on shorts, drop, push price back up again, take profits, and then boom, take profits one last time, and cause price to drop, because now there's no more demand to push price up, and there's no demand here. That's why price is going to go down here. This is where demand is. So I am watching this area because I think there's a very good chance that we see accumulation before that move to the upside from this area. Very good chance. I did have orders to go long here. This was an institutional trade signal at one point, but it is no longer. It could end up working and we can see a push to the upside, but that's a lot of coulda, woulda-s, you know. It can do that. But, you know, weekly supply is in control. So I'm not going to assume that this area is going to hold. There's momentum to the downside. I'm not going to buy blindly. Not in this scenario. So I want to see this accumulation happening again. I want to see the COT reports telling me and proving to me that accumulation is happening. I want the technicals to prove it to me. And then when everything is aligned, if I see the US dollar reversing and the euro and all that, then I'll look for the trade signal, the institutional trade signal, and then I'll pull the trigger on some trades. Pound Aussie. All right, getting back, my computer froze after doing that whole video, and I think I'm going to be able to save all that work that I did in that on that video, even though it crashed. I think I'll be able to save it. So let's get back to the analysis here. I think we were on pound Aussie when we last left. So, you know, it'd be great to buy here, but it's not close to that. We're not close to that happening. So, nothing to see here. Like I said, doing a test on these type of trades, which worked out beautifully. Still not comfortable with taking those type of trade setups just yet. So what do we see with pound CAD? Same thing, you know, we got some resistance here. We're seeing a little bit of a push to the downside. Pound will eventually gain speed, gain some momentum. We'll see a push to the upside, and with the US, with the CAD being weak, I think that's what's going to happen. Let's take a look at the monthly chart. Yeah, definitely a push eventually up here to the 180s. So I'm going to be waiting for trade signals, and then I'll be getting long on the pound CAD. Pound yen, what do we see? We see this area here, this imbalance coming into play. Monthly bearish engulf, push to the downside. So I think the same thing. This one's going to eventually move a lot higher to the 172s over the long term. That's what I believe is going to happen. But I'm going to wait for all the signals to come into play. I want the pound to gain some strength and a move to the upside to be present before I look for institutional trade signals to go long on this one. Pound Kiwi, this one's kind of a mess. Not taking any trades on this one right now. You know, if we get a push lower to this trend line, maybe I'll look for some accumulation there, but right now I'm not seeing anything. US dollar, Japanese yen, we have an institutional trade signal to go short here. We're seeing it being very weak. You know, US dollars pushing to the upside, but we see this one just stalling. So, you know, we could just see a push down here. And then when it gets down here, then slowly accumulating, and then a move to the upside. I've got orders to go long here. It's an institutional trade signal, and it'll take some time to play out for sure, but I'm not worried about that because the interest rates on both the yen and the US dollar tells me that if I hold a long position on here, I'm going to be making money just holding a long position. So I'll take that. I'll take the money. Just holding the long position, and I'll be patient with this one. I'm in no rush. I'm not going anywhere. So, and then once momentum shifts, I'll start getting in long positions and add to on the way up. US CAD, I got to update this chart because with my charts freezing, it got rid of some of my work that I did. So I'll update that and finish it later. So as I've been saying, I'm expecting this area to be taken out, right? And I laid out the reasons why I believe this is going to be taken out in my journal that I posted yesterday. So eventually going to see a move all the way up here is what I'm expecting, but I want to wait for this to be taken out first. Once that's taken out, then I'll look to get in long. I'll wait for the institutional trade signals. Okay. So Kiwi, what do we see with Kiwi? We see that, you know, some weakness has come in. We got some selling here, down, but it's a messy chart. Why is it messy? Well, because, you know, it's everywhere. Look at this chart. You know, it broke through, and then it went up, and then we have supply, and then we have this one down here. It's a mess. So I'm not looking to take any trades on this one anytime soon. All right. Last is the Swiss franc. As you know, I have long orders here, here, as well as here. So I'm already in profit with those trades. Waiting for a push here. We could get a momentum shift up here, and then a move down. So I'll be waiting for that momentum shift. We're waiting for the institutional trade signals up there, and when that happens, I'll place my orders and profit. Alright, so that's it. I'm glad I got it through. Got through without my computer freezing. And so that's it, guys. I hope you enjoyed this video. I hope you use it to make you profits in the markets. And until next time, have yourself a great rest of the week and a great weekend. Tomorrow, CFTC COT data is coming out. I get so happy when that happens, so I can sift through the data and go into my process, put on some coffee in the pot, get that brewing, and put on some nice meditation music. I look at the data and I just get into the zone. I love it. It's my process. Anyways, enough of that. Enjoy the rest of the day, and until next time, have yourself a great one.